Today, we're talking about Oklahoma City. Why is it a market that's worth considering? What's going on? Where has it been? Where is it now? Where is it going to be? Hit me with it.
Yeah, I like Oklahoma City. And you, by the way, your listeners, if they catch on to the pattern here, I like a lot of places in this country to invest. Right, my company's called Own America. It's because I believe that real estate in America, specifically housing in America, is the root instrument through which you bet on the future prosperity of the country. And so I have really almost never found a market I didn't like. There are some that I like more than others. And it always is about what's important to the investor. Like, how old are you? How long do you have to work with? What are your goals? What markets are you familiar with? So that you have the intimidation factor gets lowered by virtue of that and all that. So I'm usually going to love the market, and I'm going to tell you why I like it. And I am now recommending Oklahoma City to our large investors and to people that don't know who I am. That's what I do for a living. I represent OwnAmerica.com is my company. It's an online platform that sells rental properties. But behind the curtain, we have a lot of very large investment clients who use our platform to analyze, choose markets, and then deploy literally hundreds of millions of dollars to build their portfolio. So we are really good at analyzing the data and picking the future winners. And that technique of how we pick the winners, I'm going to share with you now because it landed in a really good place with Oklahoma City. And I'll start with my conclusion. I think Oklahoma City is the next Dallas. Okay, I think Oklahoma is the next
Interesting.
Texas. And the fundamentals that drive Oklahoma City are really similar to the fundamentals that drive Dallas. The industries that make up the job base, the quality of life, cost of living, all of those same fundamentals are in place. And we see this in other places like Chattanooga we've talked about. Chattanooga is the new Nashville, right? So there are places that have gotten very crowded with investors. There are places where the prices have gone too high, and people say,
Hmm.
well, I love those fundamentals, but I feel like I may have missed it. Oklahoma City is kind of like that. Like Dallas is a little crowded. Dallas is maybe a little bit inflated right now. If you're going to buy for 20 years, 30 years, then Dallas is still awesome. But if you want to catch a market in the early stages of its coming about, I think Oklahoma City is part of that. So let me give you some of the base sort of foundational elements first.
For sure. And then
You
I
know
also
that
want to understand the lift too, because we talk about lift so much on the power play with different cities, different submarkets, macroeconomic lift, microeconomic lift. So I can't wait to hear the lift that OKC has as well. It's
well,
gonna
I
be a
can
lot of
do that.
fun.
I'll start with that in 15
Yes, start
seconds.
with the lift.
Yeah, the first thing I always do is look at the long-term price performance of the market. The long-term price performance has been the anchor for our predictions going back years now, and we've been consistently right about picking winners that we find how they performed over the last 20 years. Because over the last 20 years, we had an unprecedented level of volatility. People know about the housing crisis. Many of them also know that before the housing crisis was a crazy boom time in the housing market. So a nice steady upward curve went nuts. It went way up and then it went way down. Then it came back to where it was kind of going in the first place. So picture a long steady curve with a deviation, almost like a heartbeat. It goes up, it goes down, it goes back to steady again. But some markets, and Oklahoma City is one of them, you can barely detect a housing boom and a housing bust on their 20-year chart. All right, if you go to ownamerica.com and look for Oklahoma portfolios, you find the market data, you'll see this chart, and it is as if the housing boom and bust never even happened. And that also goes for the entire state of Oklahoma. So that means something. With that, the way that I translate that is it's a market that is not it doesn't tilt towards fads, okay? It's like and this goes for, somebody told me years ago that Texas is kind of the same way. It didn't go crazy, it didn't get a big hangover after the party. Um,
That's right.
and
Yeah,
they
that's
said
right.
that, yeah, and they told me that, and this goes for Oklahoma, that the last fashion trend to hit Oklahoma and Texas was boots and jeans, right? They don't fall for things, all right?
Hmm.
They know their business, they stick with it. So the stress test of the last 15 years does not even register on the chart of price performance in Oklahoma. That tells me that the trajectory that we're on in Oklahoma City, which is a nice steady 3.9% annual appreciation, which is a little bit of the national average. The national average is 3.44. Oklahoma City is 3.9, so it's tracking with the country. but it totally avoided the volatility. I love that because I don't see anything on the horizon that would cause me to think there's any volatility coming. And so I know what to expect in terms of appreciation, around 4%. The lift that Oklahoma is getting comes from the job diversity in the market. Oklahoma City is the state capital. All right. And you know how much I like state capitals in red states.
That's right. We were just talking about Montgomery, I think, a little while ago, and
right.
that being a state capital in a red state, right?
Right. And the reason I like that is that red states tend to be stingy, right? Red states usually stay within their means. And the state capital, which is the anchor of the government, where the job base is very heavily weighted towards government jobs, isn't likely to be in a situation in the future where they're going to have to cut a lot of government jobs. All right. So imagine you own investment property in a place that is very heavily tilted towards any one industry, and that industry could get knocked sideways, and all of a sudden you have layoffs. Like think of like the auto industry in Detroit. Think of manufacturing cities that when manufacturing eroded, they got hurt. Well, when you're a city that government is one of your anchors, my only question is it bloated government? Is it a government that if a new governor comes in, he or she might come in and slash some jobs? Doesn't really happen very often, but sometimes it could, and there's a vulnerability there. But in Oklahoma City, I like the fact, for example, that just a few years ago, they had a budget deficit of $800 million. Okay, is it 800 million? Is it 800 billion? Yeah. They've cut that down by like 80%. Yeah. So they had gotten they run a little bit of a little muck. They have gotten themselves under control. But here's the thing I love. I look at a chart that we call job diversity. It's what different industries make up the job base in the market. And the number one in Oklahoma City is trade, transportation, and utilities. Okay, so that's the oil and gas industry. Number two is government. So you have a state capital that government is not its number one job category. That's important to me because that means that it's, there's commerce that drives this city. That's Lyft. They were ranked recently because of their job growth of being the 16th fastest job growth city in the country. But if you go down a list of all the companies that are based there, you haven't heard of any of them, right? And I love when it's Amazon. I love when it's some really great, sexy company we've all heard of. But I kind of like it even more when it's a bunch of companies that have 75 employees, 200 employees, 500 employees that you and I don't know, because it's just that's what creates the bedrock, and it takes away the potential.
It's the foundation.
Exactly. Yep. It's a foundation that's diversified with lots of businesses, lots of different things that no one thing can go wrong that's going to actually cause any kind of, crazy pain. So it's one of these places where I like everything I'm seeing. So now I start looking for something not to like what am I missing? What could go wrong? And I can't find anything in that market. And then and I know we're close on time, and here's the big finish. And that is, you and I have talked a lot about this rule of 10%, that the housing market, if you combine your yield, which is what your profit is after you collect your rent and pay your expenses, America is like a 6% yield market, maybe 5, maybe 7, but usually 5.5 to 6. So you're going to put money down and get 5.5 to 6% back every single year on your money. And then it's a 3.5% appreciation. So you wind up with like 8.5, 9, 9.5% combined between yield and appreciation.
Yep.
You find anything north of 10, that is an attention getter. Oklahoma City, I'm looking at a portfolio that we're marketing very shortly where the yield is 9%. The appreciation we just talked about is almost 4. You're looking at a market that is going to do a 13% return while you sleep. That is a really exciting thing. So I think it's worth a lot of people's attention to look at Oklahoma City as an investment market.
Except if you don't like the Oklahoma City, what's the football team?
I don't know football, man. I know real estate, so I can't help you.
I don't even think they have a football team. Do they have a football team? I'm looking at my producer, Dave. Oklahoma City.
The Cows? Is it the Cows?
The Shepherds? The something? Exactly. If they don't have a football team, I'm not interested. Totally kidding. I agree. I mean, and here I am a Lions fan. All right.